I want to go ahead and thank everybody for taking the time out of their day to attend this presentation, Ready to Start a Business. My name is Kyla Benson, and I'm the Director of Events with the East Colorado SBDC. The Small Business Development Center offers free confidential business consulting to our business owners and entrepreneurs within the state of Colorado. We also put on events and seminars, one which you are attending today here via this webinar, and we assist our small business owners in putting together some opportunities to meet with different lending institutions and hopefully to obtain financing. That's something that we're always welcome and asking our entrepreneurs to meet with us so we have an opportunity to discuss further and to build small businesses within Colorado. Want to go ahead and thank Jesse Esparza. He is also one of our SBDC consultants who will be putting on this presentation today. Again, please go ahead and put any questions that you have in the chat box at the bottom. And without any further ado, I'll go ahead and turn the time over to Jesse.
Thanks, Kyla. So welcome, everyone. It looks like we probably have about 8 or 9 individuals, those of you that are hopefully starting a business or ready to start a business. Again, just to plug a little bit more from what Kyla said, you know, the Small Business Development Center is a great resource, and I hope that wherever your SBDC is located, there are 14 centers in the state of Colorado, and I noticed that some of you are not from the East Colorado, but definitely connect with one of the SBDCs, and they're a great resource. So I wanted to just kind of go over the 1 hour. It's going to be a very quick general information about the startup orientation process to your business. I'm hoping that many of you have already at least kind of looked over what you need, maybe gotten some information. The Colorado Resource Guide is a very good one. Hoping that you've made some contact with someone. So I encourage you to participate, to attend a one-on-one session with one of the counselors in one of the SBDCs. So again, as I said before, the mission for the SBDC basically is to help businesses grow and prosper. And Kyla talked to you about some of the services that we provide. Want to really emphasize that most of the services are free, and we're here to help you. So what I'm going to cover this morning is going to be just a general overview of the legal structure and registration, just barely the overview of business taxes. I'll give you places to go and get the information. We are not accountants or attorneys, so I can't really get too specific on those taxes. We encourage you to contact an attorney or an accountant for that more specific question you might have. We'll talk about bookkeeping, the business plan, obviously, and then just generally some of the insurance needs that you may need to look into. We'll talk about marketing, and then if you're going to start this business with a loan, some of the financial options that you have, and then how you can grow and keep the business focused to help you be successful. There are basically 5 components when you are going to start a business. You want to think of the registration, the legal components of, for example, the EIN, the registration with your city, registration with the state, the type of entity. Those are really important components that you want to start with because they all have implications towards the kind of taxation that you're going to be responsible for, as well as the kind of liability that you're going to put yourself into. Taxes, of course, you know, you're going to be dealing with federal, state, city, and there are a variety of different special taxes that your business might have responsibilities to depending on the type of product or sales that you are going to get into. Branding, that's critical. As a startup, you want to truly get a good sense of how to communicate your philosophy, your name, your values. So branding is going to be important in this whole process of a business. Market research, definitely. We'll talk more about these, but these are the components that are very, very critical to starting a business. And then, of course, organizational structure, record keeping, data collection, management. As I work with individuals, I see that many fall on this component, and it just destroys their businesses very rapidly when they don't have organizational structure. So when you think about legal structures, it really is important to understand and think about who's going to own this business and to what extent do you want to control the business. How are you going to manage and who's going to manage? Where are the revenues going to come from? What kind of taxes do you anticipate? The assets of the business are going to be important. All of these questions are going to be important in deciding the kind of structure, legal structure that you want to set up. So let's get started on the different type of entities that exist in the state of Colorado. Basically, there are 5. And the first one we're going to talk about is the sole proprietorship. So when you think about the sole proprietorship, think about a very simple type of entity, one that does not have to be registered in the state. Anyone that has a product or services and they sell that product or services, they've become a sole proprietor. We consider sole proprietors as DBAs, doing business as. And so when you think about the type of entity, it's very inexpensive because you don't have to register. Really, it's more or less defined as a self-employed individual. Almost anyone can be a sole proprietor if you're over the age of 18, but it also has some detriments. So because it's inseparable from the owner, that means that really you're doing business as a DBA. You can call yourself anything you want, but whenever you make any transaction, you sign anything, you're really doing it as you, the individual. That means that you have the liability of whatever you do in that business. If you fold and you have a financial responsibility, it's you that owns that debt. If you get sued and you lose, then you are the responsible individual to pay any consequences for that suit. That's what sole proprietors have in terms of unlimited liability. The business also will dissolve whenever and if you pass on, or when you fold. Basically that name dissolves and it's over. The pass-through tax. It's really defined as the concept that the business is not going to pay taxes, but it is you, the individual, that pays taxes. So any profits that you create are going to pass through and onto you into your tax bracket. So that's the sole proprietorship. Again, very simple, but sometimes very volatile in terms of security. The partnership is another type of entity, and anything I say about the sole proprietorship, I would ditto with the partnership. The only difference is that the partnership has more than one individual. So we consider partnership basically a general partnership, doesn't have to be registered. It has the same tax liability as the sole proprietorship. Some positive things about the partnership are that it is, again, very inexpensive. It does, in fact, have the ability to support the strengths of the partners. So, for example, the partners, maybe I have a strength in accounting, and in our business, Kyla has a strength in marketing, so I'm going to take care of the accounting, Kyla's going to take care of the marketing, and we're working with our strengths as compared to the sole proprietorship, whereas the sole proprietor owns everything and wears all the hats. It also has the ability to bring more capital to the business. The example would be Kyla and I are in this partnership and we need some additional capital. We bring in another partner with some capital. Another example might be that Kyla wants to get out of the business and the partner and myself are still in business, and we can still manipulate the whole concept of the partnership that way. So again, very it's a very proactive type of entity that can work in your favor in terms of growth and how it moves towards the changes that occur in a business. Of course, the detriments are the same as the sole proprietorship. So just to remember that a partnership has the same concept, that it does not have very good liability protection. Everything partners do, they are doing under their own individual names. They don't have any real tax benefits because the profits are passed through the business and on to the individuals. The partnership obviously dissolves when one of the individuals, if there's only one left, then it becomes a sole proprietorship. Probably the other thing about a partnership would be that it's really important, if any of you are going to think about a partnership, to at least consider very strongly to develop an operating agreement with your team. This is very important, as it really helps you in the future when you're working your business for all the things that come up. The next type of entity is a limited liability company. And the limited liability company is probably, we could say, it's considered to be the best of both worlds. Why? Because it looks like a sole proprietorship, it acts like a partnership, and it has some concepts of the S corporation. So this is a really good entity because in fact it does separate the individual from the business, and so that's why a limited liability company must be registered in the state of Colorado. It has the ability to be a single or a multiple owner, so you can have more than one individual as a limited liability company and still operate it as a company. It is a separate legal entity, meaning that all of the workings of the business stay in the business as long as you keep that everything separate. In other words, what's very important in a limited liability company is that you do not commingle your money between you and the company. Owners are called members, so the state of Colorado provides one owner, and if in fact there's more than one owner in the limited liability company, you have to submit a document stating additional owners to the registration process. So you do need articles of organization. meaning that the state will provide you with a template to determine who is the owner, if in fact who may be a manager in the business, and how you're going to establish the communication, addresses, phone numbers, those kinds of things. So you do get liability protection if, in fact, as I said, you do not commingle your money. That's why limited liability companies are very effective as long as they stay separate from the individuals. They can be costly. Why? Because if you get more than one individual that owns the limited liability company, you may need to establish an operating agreement, which is something we recommend. You may need to have an accountant, an attorney. The more individuals you have in a limited liability company, the costlier that it will become, just because you want to hire these professionals to establish the guidelines of what everyone is going to be responsible for. Again, a limited liability company, as I said earlier, is the best of both worlds in a sense, because it acts like a sole proprietor in a partnership in that it is also a pass-through tax. Any profits that this limited liability company is going to create is going to be passed on to the individuals and onto their personal tax bracket. The next type of entity is the S corporation. So the S corporation really is probably considered to be the best protection. It has the best liability protection of all the three other entities that I spoke about, because it is in fact an entity into itself. The S corporation can have multiple owners, but in the state of Colorado, you can also have one individual owning an S corporation. The way it separates itself is through shareholders. So that's really the process of ownership, is by the number of shares that you own and the number of individuals that own those shares. S corporations will have a board of directors as well as have a set of bylaws. The difference between S corporations and all the others that I spoke in reference to the sole proprietor, the partnership, and the LLC, those three cannot have, you cannot be an employee of a sole proprietor, partnership, or a limited liability company. But you can be an employee of an S corporation as an owner. So that is a big difference. If you're looking to be an employee of your own company, then probably you want to consider the S corporation over the other type of entities. You can separate totally the S corporation for it to pay its own taxes, or you can create it as an LLC and make it a pass-through tax like the LLC. Usually the S corporation has a little bit more opportunities for capital in that if you sell shares or if you bring other individuals as stock owners, shareholders, it has the ability to raise capital. The detriments, of course, are, again, the more individuals that you bring into a corporation, it could get costly because you're having to pay attorneys and accountants. And remember that it's not 100% protection, because you can lose the liability protection in situations that that are, you know, maybe the government agencies are able to to pierce the corporate veil. The other type of entity is a C corporation. I don't talk too much about the C corporation because it's considered to be a fairly large business. C corporations are corporations that have more than 100 shareholders, and they also have at least 500 or more employees. So the SBA considers a small business to have less than 500. C corporations usually are considered to have more than 500 employees. Okay, so that's the entities, and once you have decided what entity you're going to register as in the state of Colorado, if in fact you're going to register, you can register a sole proprietor, you can register a partnership, but you don't have to. But you do have to register a LLC and an S corporation. Once you've made that decision, then you are going to first go to the Secretary of State. And I'll go there real quick and show you that once you get to the Secretary of State website, you basically can go to search the business database to determine if in fact if you're going to register your business name, the state says there can only be one name in the state of Colorado of that entity. There can be other names of a different entity, but only one of that entity. So what you want to do is you want to look, pick a name, of course, that you have in mind, put it in, and check to see if the name exists. So you'll see here that we do have two entities that have the same name, but one of them is an LLC, the other one is designated as a private corporation. So once you have decided, okay, I'm going to be Morning Sun Enterprises, but I'm going to be a sole proprietor, you can use that name. But there can only be one name of that entity. The sole proprietor is going to cost you $25. The partnership is going to cost you $25 if you want to register those two. You must register an LLC. It's going to cost you $50. And the S corporation is going to cost you $50. The next step is to obtain an EIN. If you are a sole proprietor or a partnership, you can use your Social Security to establish your business tax number. But if you are an LLC or an S corp, you must obtain an EIN. So basically, you want to go to the irs.gov site, and at the irs.gov site, all you've got to do is put in the search engine EIN, and up pops the page that you can apply for an EIN online. A very important point to this is that if you go to Google and put EIN, you're going to get private business entities that are going to want to sell you an EIN. The IRS will give it to you free. The third step is to obtain a CR 0100 form from the state of Colorado if you are a product-oriented business. So that means that any business, and we'll talk a little bit more during taxes, but if you are going to sell products, you will go to the Department of Revenue and obtain a CR 0100 form. So basically all you do is you put in there CR 0100 in the search engine, and up pops the form. And it's really important in this whole process that if you're going to be a product-oriented business, that you first get the registration because you need that number and information on this form. You need your EIN on this form. So you've got to follow those steps in that order. And then this information will provide you with sales tax registration that you'll need to take. The form is very easy. You see that the letters represent a very good direction to this form. So now that you've done the 3 steps, a critical component here is to remember that you've got 3 numbers. You've got the Secretary of State number for your business. You have an EIN number for your tax ID. And now, if you're a product-oriented business, you have a sales tax. Do not confuse these numbers when you're filling out the information for other businesses and for the reports that you need to fill out. Step 4, local business license. Every business that creates a business along the Front Range is responsible to get an application, a business license within their city where their business is going to be located. Step 5 is you open a bank account, and then of course step 6 is for you to get insurance. So once you've been through the steps, it's time for you to consider the type of insurance that you're going to need. For businesses, there is general business liability insurance. And basically, this is the type of insurance that will protect you against losses, any injuries that occur in the business. So general business liability insurance is the basic foundation to the business insurance that it's probably going to at least be the first step. If in fact you have a product, you may want to consider product liability insurance. If you have a service, then you may need to consider the completed operation insurance. There are some additional type of insurance that might be appropriate for you. If you have a brick and mortar business, you may want to consider, and may be in your best interest, to get property insurance. Business interruption insurance is a type of insurance that's going to help you if there's a catastrophe, something happens in your business, you get a fire, then business interruption insurance is going to help you stay in business. And of course, errors and omission is a type of insurance that is going to help you in terms of any errors that may occur. Any, of you that are web designers out there, document creators, anything that's going to have that liability would be a good type of insurance for you to obtain. So business taxes, as again, I'll reiterate, I'm not an accountant, but a little bit dangerous on that level. Here is just a information, 2015 information from SBA relative to what we as Coloradoans pay as business owners. So you will see that we are 8th. Generally, with all the taxes that exist for business owners, it's going to come to about 32% is our tax base. But be glad you're not in California. This is a very good publication that the state of Colorado puts out. And it's really important that you at least put down the publication number, which is the DR0099. If you go to the colorado.gov site and just put in the search engine DR0099, you're going to come up with this publication, which is probably the best resource that you can have to help you understand your responsibility for your taxes as a business, as well as how to send them in, what the amount is that you're going to have to pay as a sales tax. It'll give you information about your particular business, how you collect them, the kinds of records you're going to keep. It's really, really very, very good. So I recommend that every business owner start with this publication because it's going to help you throughout your business. There are basically 5 different types of sales taxes that the state of Colorado is going to require you as a business owner. Those of you that have a product, if you sell, rent, or lease anything, then you're going to need a sales tax license. If you are going to sell to the end user, then that sales tax license is going to be your Colorado retail license. Some of you may want to purchase business to business, and therefore you may want and have the opportunity to take out a wholesale license. So that means that you do not collect tax if you are purchasing from another business. It's not until you actually sell it to the end user. And then the local license that we spoke about. Every business that exists in the state of Colorado reports to their city and has to purchase a local license. The other type of tax is called a use tax, and basically the definition of that is that anything that you have purchased that you did not pay a tax on in your business that you're using, you have the responsibility as a business owner to pay a tax on that. And that's considered any tangible personal property as well. So property tax, that's anything that has any equipment or property that has value is going to be taxed. Okay, the other type of income tax is, the other kind of tax is the income tax. We as business owners also pay a tax on profits that we create in our businesses. So there's a federal tax as well as a state tax. And those of you that are going to be limited liability companies or S-corps, you may have estimated taxes that you have the responsibility of paying. If you're a sole proprietor or a partnership, you may be passing through that tax onto yourself and paying it at on April 15th. This is a very good website for getting the publications that I referred to earlier. And if you go to the colorado.gov site and you go to this education and legal research window, it gives you really good information. Here are all the publications that you may even want to read. It gives you information of all the classes that you can take, and you can even participate in online classes for how to complete your taxes as a business. So this is a very good resource for you to consider in terms of the business taxes. So now we're looking at the organizational structure. As I mentioned earlier, organizational structure is very important to business owners. It will help you think ahead, document ahead, as well as plan of your business ahead rather than from the seat of your pants. So why is this important? Well, it really ultimately it's going to help your performance. Organizational structure helps to give you the opportunity to measure the growth of your business, things that are changing in your business. It helps you make decisions. There are going to be individuals that are going to require you to report information. That's organizational structure. If you ever are going to apply for a loan, remember that it's when you don't need the money that may be the best time to apply for the loan. It's going to help you facilitate taxes, and it provides a lot of information about anyone that needs it from the agencies that require it. So what do you do in terms of how do you keep records? As a small startup, you don't have to get real complicated. You can be very simple in the whole process of record keeping. Make sure that it's a process that is easy to understand by you and by any other agency that is needing your information. So basically, you think of the three very important steps to good record keeping, and that's as long as it's reliable, and as long as it's accurate and consistent, you're going to be fine. And then make sure that you provide all that information in a timely manner so that your business has records of the past, the present, and the future. So what you do is basically, to get started, you just develop a system. The IRS says you still need to save receipts, but you can scan the receipts and put them in a system that is reliable, accurate, and consistent, and is easy to read. So what do you track? All of the information that is relative to income tax, anything that has an asset, and all of your expenses. And how do you do that? Well, one way, of course, is to establish financial statements. Probably the most important of all of these three is going to be the cash flow statement. And the cash flow statement gives you the ability to know how your business did in the past, what it's doing now, and it will help you project to the future how you're going to do in terms of your revenue and or your expenses. And remember that the cash flow basically is only it's a sheet that shows what you have at the end of the month that you can carry over to the next month. The income statement, some of us call the profit and loss statement. That is important because it gives you the ability to determine how much profits you're creating out of your business. And it really gives you a good sense of where your expenditures are occurring in terms of what you're selling. And then, of course, the balance sheet. For those of you that are startups, and if you've just started your business, probably you may not have a balance sheet at the very beginning, but it's good to create a balance sheet even 3 months after you've started your business so that you can show the strengths of your business and your assets and liabilities. I said earlier that of the 5 components that branding is important. Well, when you think about branding, market research is a way to begin the branding process to your business. So market research is critical because individuals who start their business with emotions most likely are not going to be too successful. You've got to really begin to establish some good foundation to the fact of whether people really need or want your product or service. So it's important in terms of not making these assumptions, but in fact testing them out. It's going to help you define your customer. It's going to help you look at the size. It's going to help you determine what's motivating them to buy what you have, as well as to give you the opportunity to see what kind of competition you have out there. So these are the questions that you want to ask yourselves. Think about the customer, and once you begin to look at the data, it will help you truly define the product you have or service to the individuals that may need it. There are basically two types of research. One is secondary research. And you can look at secondary research as the type that is demographics, for example. And when you think in terms of the kind of demographics, we talked about size of population, age, income, those kinds of things. A very good resource for any of you that are looking for demographic information is to go to this fact finder, and it's really good because the U.S. Census Bureau has defined a lot of this data to the local states and counties and cities. So for example, I'm going to put in a zip code. So that's something that you may want to do is go to Fact Finder, put in a zip code 80631. Let's do that. So Fact Finder tells me that in this zip code there's 48,603 individuals. Let's look at their age. The average age is 25. Let's look at their education. 73% are educated. Let's look at housing. 17,000 homes. We can also go a little further and we can look at the types of homes that exist in this area. So it aggregates this information even further to the types of homes, the kind of structures, when they were built. So that might be the, for your business, this may be really, really good information. If this is what you need, you can even download it to your computer in either a PDF, Excel, or a rich text format. And then you have it on your own, and you can even do more disaggregating of the information that you need. So again, very, very good detailed information. Again, depending on where your business is, if you have zip codes, if your business is going to be in that zip code, you're going to get a lot of good information. You can look at surrounding zip codes, and you can even do some comparison zip codes. So when you think in terms of how critical, you might want to compare, say, a city, say in Lafayette versus in Erie, you can compare that as well. So it's not just looking at data from your point of view, but what is the comparison that others are also trying to do in their city as a competition. Obviously, you can get secondary data at your local library. I have on this side, because I work a lot with the cities of Erie, Firestone, Frederick, Meade, the libraries in this area are very good because they have a lot of good free resources, and I'm sure the libraries wherever you're at also can carry the same kind of information that will be good to you. There's basically two very good secondary research programs, and that is Reference USA is probably as good as Demographics Now. So utilize those resources and they'll really help to give you some additional information for secondary research. The next type is the primary research. So primary research is basically going beyond just the secondary, but it's very more localized, it's very much personalized. It's the kind of research that you want to do in terms of asking questions, doing surveys, questionnaires, getting online, using your email, using Facebook, but in fact connecting to individuals to ask them basic questions. The key to primary research is to ask a question the same question to many people in the same way in a random approach, and you'll get good information. So primary research is very, very important as you begin to define, the customer base and your competition. So basically, why do we want to collect the marketing research? It's because you want to have a good value to your service. You want to provide what the competition doesn't. And you really want to ask questions to your customers as to, is it in fact they want what you have or not? In terms of organizational structure, a good way to truly get your business set up to have a good future orientation to structure is a business plan. And I'm not talking about a 50-page document. If you have a very small business, you're growing, you do not have to create these huge documents. But basically, remember that a business plan is to help you really structure your ideas. It's a blueprint. It helps you basically begin the business and create that business to maturity. Key component of the business plan are goals and objectives. If you do not run your business with a set of goals and objectives, then you're probably going to lose sight of where you're going. And of course, it gives the ability for you to have opportunities to obtain capital in the future. So here are the elements of one type of a business plan. And this one is called a Pro-Forma. A Pro-Forma means basically that it has at least 5 years of projections in the financial section. Most lenders, most of the banks of the lenders that we have in the state of Colorado are going to require, if you are obtaining a loan, for you to do a Pro-Forma business plan. So these are the components of a Pro-Forma business plan. A little bit more complex than just a basic action plan. If you are not out to obtain a loan, but in fact bootstrapping your business, then an action plan would be very advisable. So the action plan basically has these components. It really will give your business an opportunity to establish a good branding. It gives your business an opportunity to look at organizational structure and to work the business from these components. And so why do I make these in red? I tell my story that if you're the laziest of all laziest business owners, at least do a vision, mission, statement, goals, and objectives. That will at least help you direct your business in some direction. But I hope you're not. So finally, the financial component is a critical part because you want to structure your business so that it grows with some relevance to your ability to be successful. So when we think about managing your business, there are some very important pointers to this. Try to start your business with your own money. I mean, of course, if you have to have money, try to keep it as small as possible. Seek professional advice, and then always keep a good source of data and collection of information so that you can make the needed changes that you're needing to make. Here is a list of the different types of lending that exist in the lending opportunities, mostly in our area. So you can basically see that the small business owner most likely is utilizing their own funds and they're bootstrapping their businesses. But you can approach family members. We talked about partners. They bring in some good capital sometimes. You can use charge cards, friends, bank loans, and these others. we know that businesses fail, and there is a number out there generally that about 93% of all first-year businesses fail. Why? Because of these different reasons, and not one in particular, but a combination of all of these have a lot of significance to why businesses fail. When you add more of these together, then the probability of success lowers extensively. So lowering your risk is really important to us, especially because we want to see that you're successful. And planning ahead, doing a business plan, an action plan, develop those strategies, make sure that you're working with data to help you make decisions. When you're funding your business, it's difficult sometimes to understand what's going to happen in your business, so funding correctly as you move through is really critical. Make sure that you're not growing too fast, but growing, and looking at the variables of your marketing are important to help you establish good customer service and good management skills. Okay, my friends, that is furious and fast in terms of a process to start a business, and we recommend and really encourage that you go to a local SBDC and obtain some additional one-on-one resources. The example that I'd like to leave you with is that 7 years ago I started with a small business owner who had a dream to start his business, and he came to the SBDC. He came to me. We started working with him, created his business, and every year since those 7 years have passed, I've seen him probably maybe 4 or 5 times, and we have helped him grow his business, and he's grown. He now has 2 different locations for his restaurant, but he has totally grown with the SBDC. So again, just an example that you can start your business and you have some resources out there to help you grow it and maintain it. Thank you very much.
Jesse, thank you so much for your presentation. We greatly appreciate it, and everybody who attended today. And again, just reiterating Jesse's invitation for all of our attendees today to go ahead and connect with the SBDC office local to you. Again, thank you all for taking your time, and we will see you next time. Have a great day.